What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ROOT for Root Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, this will be more of an update since we've covered it on the channel recently. We were talking about the potential for a breakout of this overall zone right here, and with the entire broad market selling off on Friday, namely in tech there, this led to some downside activity across all things, right? So all things considered, no pun intended, is the chart destroyed might be the question you're asking, and I would say absolutely not. You can see that although it was a red day, we did spend a majority of our time still consolidating in that overall range, which we discussed in the last video on this chart, and that again is just striking me as price acceptance, price consolidation, right around the $6.50 mark. You'll also notice that on the end of the day sell, it left us with a long lower wick, indicating that buyers did step up at the prior breakout point. So from right in here, there was your 628, and there's your lower wick, right? So all things considered, the chart is not destroyed by any means. As long as it remains in this overall box, I would say it's fine, right? And from the daily perspective, what that looks like would be here. As long as it can consolidate here and not roll over, fine. I mean, the chart, again, is just dealing with the ebb and flow of the broad market and also getting some price acceptance here at that $6.50 mark. So the upside levels still remain the same. We would need to see it clear $6.66. Now we're going to have a couple more bumps in the road, certainly that 682, and then the high from on Friday morning, essentially at 7, the round number, just about, also coming from prior structure in here. So certainly, don't get me wrong, there's a lot of work to be done to the upside, but it's not like the chart's destroyed. This consolidation here is still healthy. After that, to the upside, you're looking at 767 and 840, as we discussed in the last video. Anything underneath 628 starts to put into play, is this going to be more than a pullback? Are we sort of coming back down into this overall range in here? Wouldn't really want to be interested and be fishing for longs in that scenario. If you're dead set on it, the only thing that I could potentially see being a play here would be if we draw in a support trend line like this. Maybe if we pull back into that support trend line, there's an opportunity for a buy, but it would really have to have confirmation if we fail underneath 6, the round number. So what that might look like would be a hammer candle here, something that looks like this, indecision doji. Excuse the length of that lower wick. I'm not implying that it has to come to 540, just being the structure of the candle, right? Indecision doji, anything that would make you question, is this pullback over? Your long is then over the highs. It would be nice if it coincided with 6, the round number, to get back up into some of these upside targets, notably, 650 just being a magnet with all of this price acceptance and consolidation around it. So those are my thoughts here on Root. Chart is by no means destroyed, and wanted to bring you that update. So if you enjoyed the video or learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.